Well, I think we are in a pretty strong economy territory, and I think Federal Reserve will really have to run a little faster to make sure that inflation doesn't go completely out of control, which is not a particularly good news for the market going forward.
The bulls would argue that there's still plenty of cash in the private sector, that household balance sheets remain strong, and in fact earnings growth looks to be relatively robust still here. So even as we see these higher inflation prints and the central banks, including the Fed, are forced to react here, that we can expect markets to grind higher from here on in. How does that match your expectation?
Well, the real side of the economy, I think, is doing quite well, and it's going to probably do better, especially in the United States. Not so in Japan and Europe, where we don't produce energy. Japan, in this situation, we import a lot of food as well, and we import a lot of energy. So I don't think Japanese economy will be in very good shape. But in the United States, U.S. have both the energy sector, a huge food production sector. And so overall, I think U.S. should do better than Europe and Japan. But in that case, the Federal Reserve will have to raise interest rates to contain inflation. And the numbers you just gave, 6.4% inflation rate. The last time when inflation rates were like that, Federal Reserve federal funds rates were much, much higher, like 18, 19%. Now it's down to less than 0.5%. And so there will be quite a bit of catching up to do for the Fed. And I think that kind of worries the market, at least on the bond side, and perhaps some on the stock market as well. And the other point is that in order to catch up for what was lost, the Fed is now trying to move into quantitative tightening, the QT. The last time when the Fed did the QT back in 2015, Janet Yellen, Stanley Fischer was arguing that please don't look at QT. This is like, waiting for paint to dry. Remember those phrases? This time, Jay Powell has to have been saying, please pay attention to QT because this is going to supplement our rate increases. But as more and more people pay attention to QT, the quantitative tightening, the amounts involved are going to be huge. And that could add to quite a bit of pressure on interest rates. Right. So those are the things that I think we have to be very careful going forward.